Revlon filing for bankruptcy protection last week, and it may not be alone. CNBC.com's Lauren Thomas is here now with why there could be a wave of retail bankruptcies and the names most at risk, Lauren.
Yeah, thanks for having me, Kelly. So Revlon's bankruptcy filing last week, that was just the fourth retailer to file bankruptcy so far this year. And that's the lowest point in total count of bankruptcies that we've seen at this point in the year, about halfway through the year, in over a decade. So how did we get here? If you remember back in 2020, we saw a massive pull forward of bankruptcies, particularly in the retail space, as consumers pulled back on spending. Dozens of bankruptcies, many of them names like Neiman Marcus and J. Crew, had also been weighed down by debt from leveraged buyouts. So because of that pull forward, 2021 and the start of 2022, we really have seen a slowdown. Now, like you said, questions are really arising around when could we see more? Is this number about to tick back up? And what could be the factors to cause that? Really three things to watch. The first one is, for the most part, this window of opportunity that companies had to tap into the debt markets has largely closed, from what I'm hearing. And the second thing to look for are continued supply chain issues. So when you look back at Revlon, sure, this was a company that was saddled with about $3.4 billion in debt, but it also cited in its filing a number of supply chain issues. It couldn't get its hands on raw materials used to make its makeup products. And the third thing to watch, and this will be particularly important around the holiday season, is just consumer demand. Where are people shopping? If we see a pullback in categories like home furnishings or apparel, then you can anticipate after the holiday season that those are areas where we could see more distress.
Yeah, and so it's interesting, Lauren, that you say it's not necessarily just the sort of looming debt. What am I trying to say? It's not just the debt that these companies have
maturities
and the financing profiles exactly that's the issue, so much as spending trends. So retail, home furnishings, I don't know if there's particular companies we can even single out here, but what are some other places to watch for the next shoes to drop?
Yeah, exactly. Those are categories, whether the home goods and apparel in particular, I think that's where you just see still a surplus of retailers, also retailers that have a lot of real estate. That narrative of just, America being very overstored, I still think is true. And of course, companies can use bankruptcy as a tool to break leases. So that's something to watch for always, companies that still have a lot of real estate. Like you said, there are really not a lot of businesses within the retail and consumer landscape that have maturities coming due in 2023, even 2024. Many of them used the past year or so to push out those maturities just because they could get debt, for so cheap, and were able to strike those sorts of deals. If you look at where the ratings agencies, they have lists of companies most at risk of default. Some names on that list are Roden and Fields. The marketing beauty business has been named a few times. Also, Serta Simmons, a mattress maker. It's really all over the place, though. I think it's company by company, dependent upon how much debt they have, and of course, the health of their balance sheet.
Yeah, but it's a great point that it has been oddly quiet on that front lately, that we might not hear of anything in the near term, or maybe that lease renewals, for instance, could be a trigger. Lauren, thank you. We appreciate it very much today.